Creative Estate Solutions, sharing our knowledge on real estate and investing.
Investing in real estate can be a lucrative endeavor, offering opportunities for long-term wealth accumulation and passive income streams. However, for many aspiring investors, securing financing for their first investment property can be a significant barrier. One creative financing option available to homeowners is leveraging their home equity through a home equity line of credit, HELOC. In this article, we'll explore how a HELOC can be effectively utilized to purchase an investment property, along with a detailed example to illustrate the process. A home equity line of credit, HELOC, is a revolving line of credit that allows homeowners to borrow against the equity they've built up in their property. Unlike a traditional mortgage, which provides a lump sum upfront, a HELOC works more like a credit card, giving borrowers flexibility in how much they borrow and when they borrow it. HELOCs typically have variable interest rates and are secured by the borrower's home. One of the key advantages of using a HELOC to purchase an investment property is the ability to access funds quickly and efficiently. By tapping into the equity in their primary residence, homeowners can leverage their existing assets to acquire additional income-generating properties. Sarah is a homeowner with a property valued at $400,000 and an outstanding mortgage balance of $200,000. She has built up $200,000 in equity in her home. Sarah is interested in investing in rental properties to diversify her investment portfolio and generate passive income. After researching her financing options, she decides to explore the possibility of using a HELOC to fund her first investment property purchase. Step 1. Evaluating equity and applying for a HELOC. Sarah contacts her bank to inquire about a HELOC. The bank appraises her home and determines that she qualifies for a HELOC of up to 80% of her home's appraised value, minus her outstanding mortgage balance. In Sarah's case, this would be $320,000, 80% of $400,000, minus $200,000, leaving her with a maximum available credit line of $120,000. Step 2. Researching investment properties. With her HELOC in hand, Sarah begins researching investment properties in her area. After browsing listings and analyzing potential rental income, she identifies a duplex listed for $250,000. Sarah believes this property has strong rental potential and would be an excellent addition to her investment portfolio. Step 3. Making an offer and using the HELOC. Sarah decides to make an offer of $240,000 on the duplex, negotiating a slightly lower price with the seller. Her offer is accepted, and she moves forward with using her HELOC to finance the purchase. Sarah withdraws $50,000 from her HELOC to cover the down payment and closing costs associated with the property acquisition. Step 4. Securing a mortgage and closing on the property. With the down payment secured through her HELOC, Sarah applies for a mortgage to finance the remaining purchase price of the duplex. She obtains a mortgage loan for $190,000, which covers the balance of the property's purchase price. With financing in place, Sarah closes on the duplex and becomes the proud owner of her first investment property. Step 5. Renting out the property and repaying the HELOC. Sarah wastes no time in finding tenants for the duplex and begins generating rental income. She uses a portion of this income to make monthly payments on her HELOC, gradually reducing her outstanding balance over time. With careful budgeting and property management, Sarah is able to cover her mortgage payments, property expenses, and HELOC payments, while still generating positive cash flow from rental income. Step 6. Monitoring and managing the investment. As a responsible property owner and investor, Sarah continues to monitor market trends, manage her tenants, and maintain her investment property. She stays informed about rental market conditions, adjusts rental rates as needed, and allocates resources to property maintenance and repairs to ensure the long-term profitability and sustainability of her investment. In conclusion, leveraging a HELOC to purchase an investment property can be a strategic financial move for homeowners looking to expand their investment portfolios and diversify their income streams. By tapping into the equity in their primary residence, investors like Sarah can access the funds needed to acquire income-generating properties and build wealth over time. However, it's essential to carefully consider the risks and responsibilities associated with real estate investing and to develop a sound financial plan tailored to your individual goals and circumstances. With proper research, planning, and execution, a HELOC can serve as a valuable tool for unlocking new investment opportunities and achieving long-term financial success.
Creative Estate Solutions, sharing our knowledge on real estate and investing. Creative Estate Solutions, sharing our knowledge on real estate and investing.